Mostly people look at the Bitcoin dominance chart. So they say, if Bitcoin drops, the money's rotating into altcoins. And that's generally true, but that's a very rough way of looking at it. That's like saying, say if there's $100 in the whole crypto pool, and say $55 are in Bitcoin right now, and then that's Bitcoin dominance, 55%. If those $55 went down to say $51 or $50, then those $4 or $5 must have went into altcoins, and that's why altcoins is pumping. It's a very, very rough guide. That's actually not entirely accurate, especially if you are in a what you call it, like kind of an early bull market like what we are in right now, which has a number of which is more finicky. You need a little more finesse. So really, there's three things I think you should look at. One is basically what is the total market cap of altcoins, not including Bitcoin and not including Ethereum. Are they moving up? Also, what is the total stablecoins market cap? Are they going up or are they going down? And also, what is the stablecoins dominance? Is that going up or is that going down? So, for example, is this another, to use Dennis's words, is this another test that we're looking at right now? I think the test he's referring to is basically I've got this chart open. You can do this at home as well, which is the total market cap of crypto except Bitcoin and ETH. And if you're on TradingView, just type in total 3, the number 3, total 3. And you can see that it's been bouncing between this range of 300 billion to 400 billion for that's since June last year. So it's been 1.5 years. It's been in this range. And now it's hitting this 400 billion area again. It's been here 2 or 3 times before. Is this going to be another fake out? Yeah, it can happen. Or is it going to be a small pullback and then go straight through, push through? I'm leaning towards, as I said, I think it's a small bull. So I'm betting that it's going to push back and go straight through. But also, like Brian said, we had a long discussion about this, how much to commit this time. And we're like saying, okay, let's not go crazy here, because it's not an all-in kind of situation, but you don't want to miss it either. So we're trying to decide how much do we each, what percentage of our individual net worth do we each put in, so we get a worthwhile bull run, and yet it's not a huge a loss if we get it wrong. And that's what I think most people should be thinking, because this is not like, I think the young guy's attitude when they come into this space is, I'm going to follow this influencer because he's always right. He's 100%. I'm going to go all in. I'm going to go YOLO. And you find out that influencer is wrong that one time, or is wrong 3 times out of 10, which is still pretty damn good. And they're like, oh, he got it wrong. I'm going to unfollow and go back to working at McDonald's again. It's in life. Not Warren Buffett, not George Soros, not Stanley Druckenmiller. Nobody gets 100% right. You got to be prepared for both scenarios, and just think about how you handle that risk. So another chart we'll look at is the stablecoins dominance. That shows how much money is actually going out of stablecoins. So, for example, if there's if you're in front of TradingView and if you type in USDT.D, that's USDT dominance, plus USDC.D, that's DC dominance. If you with plus signs between them, you can see the dominance of all these stable coins, and they used to be at this area called 9.2% for a long time, and recently is the first time they've gone down below to hit about 8.5% right now, and that's since May 2022 as well. So that's since that. Okay, now that I've just noticed this, in fact, I'm gonna say to you guys, this is very, very significant. What Dennis was saying was, he's not sure if this is another retest. I'm not sure. Brian's not sure. That's why we're not selling our oil, beach properties, beach houses, and going all in. Nobody's fucking sure. But however, I'm leaning towards this is going to be a breakthrough. Why is that? Now, on this chart, if you look at stable coins dominance, it's in the same range. It's in the same range that the total market cap of altcoins is in as well. It's been in this range between May, June last year until now. What does that mean? That means for the last 17, 18 months, people have been holding their money in stable coins and not spending it. And yet now that range has broken for the first time. It's gone from 9% to 8.4%, which means if people had $100 in our example, and $55 in the whole crypto pool, $55 of which is they've bought Bitcoin, they're hodling Bitcoin, and about $30 they have in altcoins. Now they're taking another dollar out of their stable coins, and they're putting that $1 into the market. And we know they were putting it in Bitcoin, but now they're putting in altcoins because the Bitcoin dominance has gone down. So it's kind of like only when you look at all three metrics you get a proper view. And also one more thing I want to share with everyone is if we go onto DeFi Llama, if you're in front of your computer, go onto DeFi Llama, just look at all the stable coins total that's in the market. The green line you see on your screen would be the total stable coins, and it's actually been going down since what? Since hit a peak around $150 billion and $180 billion, 190. This is around May. Oh, also around May 2022. That's interesting. So total amount of stable coins gone down from 180 billion down to about 122 billion, and it's just resting there. It looks like a flat line, but if you were to enlarge that chart, you notice that since this date would be August 18th, since August 18th, basically it's made a bottom and it's bouncing up and then goes sideways, and since this is November 1st, so the last 10 days or so, 12 days or so, it's gone up, and it's a very steep trajectory. I'm not sure what happened around the August 19 timeline. If I had to guess, it was probably some sort of Bitcoin news, ETF news, and now we're getting another steep rise trajectory. So all of that is saying to us is, to put it all together in one or two sentences, money from outside the pool is coming in. So it's no longer $100 in the crypto total pool. Now it's gone from $100 to say $104, and then within that $104, 9% of which used to be in stable coins. Now that's dropping to 8.4%. So that money is going from stable coins into other things. What is it going into? Is it going to Bitcoin, Ethereum, or altcoins? Well, we know it was going to Bitcoin because the Bitcoin dominance was going up before, and now we see Bitcoin dominance dropping, and we now see the total market cap of altcoins that doesn't include Bitcoin or Ethereum is going up, and it's hitting the top of a range, 400 billion or so. And if that range breaks, then I think that's what that would confirm for me at least, and probably for Brian and Dennis as well, that that would mean basically we are now in a new small bull or big bull, however you want to call it, because as we can see, on the screen, if you're looking at total 3 on TradingView, it's basically been in that range. It's hit this top of the range a number of times. Now it has I'm leaning towards it's going to break through. So that's why after 8 months of not doing spaces and stuff, now I've had this big long conversation with Brian yesterday, and I said, I think it's time. I said, let's transfer more money into crypto. Let's go heavy and go early. That's just for me, not personal advice for anybody else. And even by heavy, we're not mortgaging any of our houses. We've still got our houses. If it's money that we can afford to lose. If guys like me and Brian lost this, we've still got a number of properties. We've still got stock portfolios and stuff. So be very careful if you're a family man. You got mortgages and stuff. If you're a young student, then obviously you're a different story. You have less responsibility, but you just got to manage the risk for yourself and ask yourself, if Pablo is wrong, if Brian is wrong, then can I handle this loss? Or am I going to be one of those dickheads who's going to jump online and say and write stupid comments like, you got that prediction wrong. He said it was a bull market. He said it was a bull market, right? So that's why you see these wankers online who are jerking off in their mom's basement, and they're like, "You got this prediction wrong." Don't become one of those guys. Don't become like bitter bag holders. Just be responsible for yourself. Yeah, back to you guys.
Yeah, something else that Virtual Bacon said that I really liked was that he was in bull market mode, and like that's an important thing to decide. What does that mean to be in bull market mode? I mean, it can mean researching and digging in, but I think it also means coming up with your own personal strategy and what makes sense to you. Because no matter how many other people are out there making money doing something else that you don't feel comfortable with, you're not going to do it if it's not your own personal strategy. So I think that one thing that everybody can be doing now that's free and doesn't cost a penny is to think about your own personal strategy, your own comfort level. And one thing that Pablo challenged me on that I'm not good at, that I am learning how to do, is to hold for a longer period of time and to say, okay, well, yeah, a 2 to 4x gain is not going to be life-changing, but a 100x gain will be. And so do you have the personality? Have you had the planning? Do you have the strategy to do that? And that's where crypto really is different than stocks in many ways, especially with personal strategy, because all the experts agree basically in stocks that the average guy should just buy an ETF like SPY, S&P 500, and that's going to outperform most people in the market. And that might be the right strategy for people listening here, is to just buy Bitcoin and Ethereum, to set price targets, to take initial investment out, and to not mess around with small caps at all. So the one thing that everybody can be doing that doesn't cost a penny is to be thinking about your own personal strategy. And like Dennis said, bull market mode doesn't necessarily mean that it's going to be a bull market without bumps and without ups and downs and corrections and pullbacks and new lows. It's more of a mindset of how am I approaching this, in my own personal situation, my own personal finances, what I'm comfortable losing, what works for me. Do I want to buy AVAX and Solana and Cardano and ICP and take profits when it hits 20%? I mean, this is something that people don't talk about enough, that even a 20% gain is really good. Even a 2x or 100% gain is really good. That's nothing to laugh at. And so, there's all these details in a personal strategy and someone's own outlook on crypto that we can be doing right now. And getting that mindset dialed in, getting that mindset sharpened, it does take time. So we can hit the ground running with that regardless of what the market's doing.
So where are you guys interested in right now? Like, where are you watching?
Just to follow up on Brian, because I had my mic switched off. I think I think both of what you guys are saying makes a lot of sense. It's about being in bull market mode. Not that we haven't been researching coins in the last few months. We have been doing research on them, but I'm sure you guys have seen this. You look at a coin and you go, oh my god, a major new piece of news just came out. How's the market not pumping? I'm going to buy some. You buy it, and it doesn't pump. It's like won't change in news. If this was a bull market, like even without news, things just pump for no reason, right? And then major news, like you can name so many coins that you've seen over the last 12 months. Major news drops, and you're like, how is this? No, there's no market reaction, and in fact, they hike rates more, and then it goes down another 50%. So, I guess that kills the enthusiasm somewhat. But now at least you see prices are responding to narratives, to news, and sometimes even without news, it's pumping just on pure speculation. So it's if you guys haven't been doing the research, then now's the time to definitely start again, even if it's a retest, even if it's a fake out. It's been like 1.5 years already we're in a bear market. We are only getting closer and closer to the next bull market. So follow the guys here who've been talking, and see what they're thinking, and then do your own research and think about what's the right strategy for you. Someone who's a student, is going to have very different needs from someone who's a family man with mortgages and stuff. And look, as Brian said, we usually have an audience of about 10 times this. The fact that there's only 1/10 as much audience here is because we're doing this on Brian's Twitter and not on Pablo's Twitter. Sorry, shit, I can't believe I said that part out loud. It's because the market is not reacting at all. If you were to speak to people who used to be in crypto or who were curious about crypto, you said, oh, there's going to be twin ETFs. And this Pablo guy said he thinks the twin ETFs will pump crypto the same way that AI pumped the NASDAQ 7 stocks. And they'll be like, whatever, and that Pablo guy, he's a wanker. He got the prediction wrong. Right, you're going to get a lot of attitudes like that. That's how you know. If you speak to 9 people like this around you, 10 people like this around you, 9 people or more are going to react like that. And you're also judging by our audience size right now. You're still early because those 90% of the retails are still ignoring this. When they come in, if this is like a basketball game or a NFL football game, then that's the fourth quarter, right? Right now we're probably in the first quarter. The whistle, the starting whistle probably was blown like about a week ago, a month ago for altcoins, not for Bitcoin, for altcoins, and retails, the friends around you, they're not even going to notice till fourth quarter of the basketball game or of the Super Bowl when you've been playing for 3 quarters already. Just look around you, right? The doubt you're feeling right now, the doubt that we have, that I have, that Brian has, that Dennis has, that feels right. I remember Brian saying something like, he said, when I first bought my first house, and that was a second house, that was my most successful purchase in my whole investment career. I did it when I was embarrassed to buy it, to talk to other people, because if I said, I'm buying this house in 2009, and people were like, oh, what an idiot, man, everyone knows it's going to crash. Like, same thing happened to me. Like, I bought, in 2009, after the crash, I was a young man. I took all my savings and I went all in on Chinese stocks, Hong Kong stocks, and also some Australian stocks and US stocks. But I saw that China had more potential. It was growing faster, and a lot of it went into China. And it's like if you tell people to buy China stocks today, people are like, what an idiot. Oh my God, China. Oh my God. Right? You're embarrassed talking about it. That's why I don't talk about it much on my Twitter. I only talk about it in my Discord. Because even I am embarrassed talking about it because people attack you for saying stuff like this until about 2 years later, right? Then Brian made the best investment in his life with that house, and then those China stocks go through the roof. Some go like 100x, and then people are like, oh, let's hate on this guy even more because he spoke about something that was truly unpopular at the time and it took off. Right now, if you're feeling that doubt, that's quite normal. But like Brian summed that up quite well. If it's the right investment, if it's like an early investment where you got in really early, near the ground level or level 1, and people are going to pile in after you, 6 months after you, it's going to feel really embarrassing to even tell. You may not even want to tell your girlfriend or your friends, because when you tell them, you go, I'm investing this much into crypto, they're going to be like, oh, what an idiot, So it's if that's happening, that's probably the right feeling. So anyways, let's get back to what Dennis was asking just before this, which is what areas are we looking at? What kind of, and Brian also asked, which is what we're looking at after this whole ETH ETF news announcement.
Yeah, it's interesting that that so many people did buy the top of the last bull run. I wasn't really aware of the sentiment. I was posting somewhere, I think maybe Twitter, and I was like, hey, what is everybody into? Like what Virtual Bacon just asked, like what are we looking at? What are we buying? And everybody was like, well, are you kidding? We're just trying to get back to Bitcoin being 60K so we can break even. And I was like, oh man, there are a lot of guys out there who bought 60K Bitcoin and they've just been waiting for price to go back. So yeah, it's kind of a wake-up call of how that reverse psychology does work and how the masses are going to do the opposite of what they should be doing. It's the age-old, old as time, tale as old as time. Buy when there's blood on the streets and sell when there's joy in the air. And people, you really have to be self-disciplined about doing that. It doesn't come naturally. It's kind of like a diet. And not weighing 350 pounds. Like the McDonald's tastes good. You have to be self-disciplined about not doing it. But back to the question of what are we interested in? I have a question, and my question is, is this a layer one bubble? I was sort of hoping that and this is probably something that Virtual Bacon with his specific knowledge on all the technicals can address, but I was kind of hoping that in the bear market that we would have a cleansing of layer ones, right? I mean, and I'm like, man, we did not have a cleansing of layer ones. We've got ICP over here, we've got Solana, we've got AVAX, and then we have all of the cryptos that are in those ecosystems, the DEXs, the oracles, everything that's within that. And so we really didn't have a cleansing of, if anything should have went bust, it should have been Solana, right? I was like, let's just get rid of Solana, FTX, VCs, all this stuff, but we didn't get rid of Solana. So I'm like, man, what happens here? And I'll talk about a very, very small coin that I've been watching, and this is not financial advice, it's not a promotion, it's not sponsored, I've never talked to the team, I have no affiliation with them at all, but I just had my eye on it. It's called BitRock, and it's like a 16 million market cap layer one, new layer one. And like I said, I'm not recommending anyone buy it. I'm not even heavy in it myself. I'm just watching it. It's interesting. It went through a phase where it was like, 1 million, 2 million market cap, and they launched a mainnet and a test net. And it's like, oh, well, why? You're an idiot. Why didn't you buy it then? Well, the reason was because everybody was sort of saying like, well, is this real? Is there going to be anybody building on it, adopting it? What's going on? And recently I bridged over into their decks and their little projects that are launching on the ecosystem. I was like, wow, this actually seems pretty good. But so does AVAX, so does Solana. So you can do that in any of these other ecosystems. So that's sort of what I'm wondering is what's going to happen with the layer one bubble that didn't pop in the bear market. So Virtual Bacon, like what's your strategy with that? Are you saying, forget about thinking about who's the main winner of the layer one, let's just make money, let's just rotate in and out and not even ask those bigger questions? Or are you looking for like a winner or some kind of measurement to see who's actually going to come out on top? Kind of reminds me of like, we talked about this, of course, the last bull run of the dot-com bubble, right? Like Amazon obviously came out on top of the dot-com bubble. Are we even asking those questions now, or are we just rotating?
So I think, I think layer ones is the reason why layer ones exist is not so that all of them have, actually been trying to kill ETH, right? I think it's a few reasons. The number one is Ethereum, its status being like the only thing that you can like technically copy and improve upon while having it be in a pretty friendly regulatory environment, because of Ethereum kind of being treated as commodity. Like if you try to copy Bitcoin, you can't really do it because you can't copy the history, you can't copy the miners. But on Ethereum, right, they're doing proof of stake, you do proof of stake but more centralized or something like that, and then you're good. So that's why I think that's one of the big reasons why layer ones popped off behind the scenes, I think. And second is when you run a layer one, it's kind of ran as a money game where you have your own native token, and it doesn't have to have high revenue. It doesn't have to have, there's this inherent disconnect between the revenue of the layer one and how much the coin earns versus the cost, right? The cost of the blockchain, how scalable it is. It was never meant to be a very, profitable business on the kind of transaction level. So the reason why they all do this is because they can run a large treasury, they can give out as grants, and it's just very easy to raise money. And they end up playing the money game because everyone, fork off of Ethereum's current code base, and you just go running, right? You don't have to make a new wallet. There's MetaMask. You don't have to make anything. You make, you use Blockscout as the explorer. Everything's there. So I think that's probably why there's so many EVM copies. Now, if you're still doing a Ethereum copy, I don't think any of those will survive, especially if it's a layer one setting. I think those will not survive in the cycle. If you're doing EVM layer twos, obviously that's a little bit tougher. There's still, technologies a bit earlier, and you actually have to have, certain like sequencer. You can't just do like a side chain and call it a layer two, right? There has to be roll up, which is technically, a challenge. or if you're trying to do ZK, it's more challenging. So I think those areas will still exist, but in terms of Ethereum copy layer ones, they will go out of fashion. I think there still will be other layer ones. So if you're talking about like Solana, I don't believe Solana is vaporware, because when you look at every single blockchain out there, right, whether it's Ethereum derivative or not, Solana is the fastest by finality time, 300 milliseconds. Every other chain starts at either 1 second or 2 seconds. Nothing is as fast as Solana. This is a fact. So that opens up, a bunch of use cases that Solana can do. Like they are really favored for microtransaction payments. Circle really likes using them for USDC payments. So stuff like that, right? Like you need verticals. I think you can even plug ICP in there. So ICP currently, for what people are using blockchains for right now, most people are not on ICP. But can you build very weird, interesting, or cool stuff on ICP? Yeah, for sure. And you can't do that on Ethereum or even like Arbitrum, Avalanche. ICP does have a very unique offering, right? And I think even you can plug like Cardano in there with their, very, how to say, like decentralized governance. Like if you want to build a very, self-sovereign, like nation on chain with, 100,000 different voting validators without doing much DeFi stuff, like Cardano is probably a better choice than Ethereum for that. So I think those will still exist. Now, I think also in this cycle, we might see some other form of layer ones where it's a money game, where it's easy to raise money. It puts you into a pretty friendly place in regulation. And you just, you start giving out grants, you just kind of become your own bank, right? That's what layer ones were last cycle. I think that will still play out. And when that comes, I think there will still be rotations. But yeah, back to your question, like fundamentally, yeah, I think pure Ethereum copies, they need to be cleansed. Yeah.
Okay, so I have a question. Okay, so I have a question for both Brian and Dennis. Now with Solana, the way I view it is kind of like, this is a nice, it's like a house. It's like, this is a house. It's a nice house, but it has some major flaws in it. And at $10 million, I'm like, no way. It's look at the huge problems it's got, right? But when it was down at $17, that was about 5 weeks ago, and everyone was saying it's going to be dead. I was like, that's kind of like the same house being sold for, say, $100,000, not $10 million. It's now 99% cheaper. At $100,000, I would look at that and say, that actually makes sense. It's definitely worth a lot more than $100,000. And in my Discord, I was like, let's try to accumulate this. People were the big fear that drove it down to 17 this time was because they said Galaxy, which is taking over the bankruptcy from FTX settlement, is going to sell all these Solana coins. So they feared it was going down a lot lower. I've done some research and I realized, okay, it's not really going to, a lot of those coins won't unlock for another 2 or even 4 years. So we're going to be fine. Let's just try to accumulate Solana. Didn't know it was going to go up this fast. So what I'm trying to say is this: at $17 or $30 or $40, I'm very pro Solana. I think it's undervalued. If it goes to $100 or $200, I'm going to raise the same problem. That's like the same house at $10 million. I'm going to raise the same problem I raised last year and the year before when Solana was at $200. I'm going to ask, what about the fact that it crashes every month? Have they solved that yet? If it's so centralized, if it crashes every month or so, then yes, it's fast. It does transactions. That's basically just a blockchain version of Visa. Imagine if you have Visa transactions, right? And it basically crashes every. Well, Visa does crash once every year, once every 2 years, just not once every month. And then you go to the shops, you go, here, I'll swipe my Visa card. And they're like, sorry, there's a network outage, try in 3 hours, it might work again. It'd be the same thing as that, except not as reliable. And it's obviously Visa centralized. It's owned by the company. There's Visa, the shareholders of Visa. There's no true decentralization in the long run. In the short run, it's ultra fast. It has the advantage of that Visa can't do, which is all the on-chain smart contracts. You can build projects on Solana. You can't do that with Visa, obviously. You can also do NFTs and God knows what they'll invent. So it can create a whole new Solana ecosystem, which Visa can't do. But at the end of the day, it's still quite centralized, and that's and it crashes. So that's
I can chime
okay.
in here. So I've always been like ETH maxi, right? So I've done pretty deep research on this. So Solana hasn't crashed since February. It crashed a lot in 2022. I think it like 10 times. It had even like 2 weeks of pretty intermittent downtime in like February 2022. But they did really well this year, so they definitely turning around the crash side. And February once this year, and even on this rally, like it's not crashing, which is like pretty good. Like in comparison, Arbitrum has crashed once this year, Base has crashed once this year. So I think the performance is okay. Like if they can maintain this, it'll be pretty good. It'll be the best that Solana's like reliability has been since it started. And the centralization part, so Solana has about 2,000 validators. There is a either 30 or 33% like top stake, which is by dollar staked amount. So yes, if you control, is it 30? It might be 50. So there's I'm not sure if the 30 number is a percentage or top 30 validators. But if the top 30, let's just say validators colluded, they can halt the network. That's kind of centralization. Now, if you compare this to ETH, obviously it's centralized. But if you compare this to BSC has about 50 total validators versus Solana 2,000. And if you compare it to Polygon, it has about 100, 110-ish. I think all those guys rotate, but again, like Polygon also chooses all their validators, right? So you got to keep in mind there's a certain reputation, like BSC and Polygon, they choose their validators. Versus Solana, not all 2,000 are chosen. They have a more technical requirement where your computer has to be a lot faster, so that it doesn't bottleneck the capability of the network. But if you compare it to the Polygon sidechain BSC, it's pretty much just as centralized, all three. And then a couple of other examples I've looked at, like Phantom, for example, 80 validators, twice as decentralized, but in grand scheme of things, when you compare Phantom, and then you have, what was the one we're talking about, Solana, and then you compare both to Ethereum, they're just equally as centralized, right? So I think, yeah, there's a side that people say this is centralized, but if you really are so decentralized, I think most other ones you can't touch. That's kind of, that's one side. So it's cool. The argument is true, but it's kind of spectrum, right? And I think lastly is like the token centralization. People say VCs. I thought also in majority of this year, I thought there are still significant VC unlocks. Because on Solana they claim that they have like 400 something million tokens unlocked, and then until 2025 it will only grow to 650 total, and it's all going to be circulating, and this is based on like 7% for how long, whatever. I I think like total is about 550 million total supply. Right now, 480 circulating, 650 in a year and a half. So that's pretty reasonable, but I didn't believe that. I thought, okay, there's no way. Like, these guys definitely control a lot. So I thought it's going to get well over $1 billion. But I dug into the token sale, and like, so what I found shocking was that all VC tokens were unlocked beginning of January 2021. So 9 months after the ICO, every single token was unlocked. And then even the team tokens unlocked 2 years after that. So this was end of 2022. All the Solana team foundation tokens, they got all of it. So it's circulating, and they could have sold. So yes, before it was centralized in terms of token supply. Today it's not. For sure, like it's there. If I had those tokens, I wouldn't take in profit. So that's just to say, like, basically just on Solana, right? Like it's I think it's turning around. So valuation, yes, I agree with you. Like if Solana's $100, I wouldn't think it's a better investment than Bitcoin or Ethereum. I think it's probably going to underperform. But I think that's the key point. But a lot of the fundamental stuff, it's kind of just pretty typical of what layer ones are like nowadays.
Okay, Dennis, at the start of your talk, did you say you are an ETH maxi or you're not an ETH maxi?
I was always ETH maxi, to be honest. Like,
you still are? You still are ETH maxi?
Yeah.
Okay, so okay, just so I've heard you correctly, you still are an ETH maxi even today?
Yeah, I love ETH.
Okay, so what I would say to answer Brian's question earlier, and in relation to what you just said, is this. Brian was saying something that's very relevant to what you just said, and he started off by saying, I thought there is a layer 1 bubble, as in there are just too many so-called ETH killers, so many so-called ETH competitors. I thought they would be gone. If we have a real bear market, they would all be washed out by now, and there would only be like 2 or 3 left. Like you don't see 20 search engines. You see Google, and you see maybe like another 1% uses something like DuckDuckGo if they really tech nerds who care about their privacy, and if they're in China, they use Baidu, right? That's about it. Google's 90% of the world's market. 80% of the world's market. Baidu makes up 18% just because they've got all the Chinese population, and DuckDuckGo gets like 1.5% if they're lucky. That should be the way it eventually is with all the all the layer ones. So
I kind of disagree there, to be honest. So I think fundamentally how ETH is designed, it can do everything. I think DeFi, 100% of DeFi and NFT and finance tokenization should happen on some form of Ethereum or its layer 2. But there are many other things that ETH cannot do. Like if you want to, if I want to send you something, or if I want to do like a social media app, and I want to send you a message, like Ethereum confirmation just takes, way longer, like 30, 40 seconds. And there are certain things it just cannot do. And even the way layer 2s work today, they cannot scale to that kind of throughput. And also all of them still have costs, right? So if you're talking about like a zero cost where something can be just subsidized, that you don't have to fund something with gas before using anything, like that can't be done on ETH ecosystem. So yeah, I think if we're talking about DeFi, yeah, everything should be on ETH. But I think that's not everything.
Okay, the search engine scenario is like one extreme case. And then there are other fields where you have a duopoly, like Pepsi and Coke, right? The people talk about Fanta and Dr. Pepper and all that. They're actually owned by Pepsi and Coke. Even like those mineral water drinks like Evian, that really expensive upmarket mineral water is actually owned by Coke. Then you have some markets that are oligopolies. So, for example, like the oil market is owned by about 7 or to 10 nations, the OPEC plus, essentially. Or if you, to give an example that people know about, say something like the sports shoes market. Sports shoes market, you have Nike, Reebok, Adidas, and then maybe Converse, maybe like Supreme, whatever. Like there's more than a few. The Nike would be dominant, but then the other ones also take up good market share. So eventually, but what I'm trying to say to both Brian and Dennis is that we certainly do not need, I agree with Brian, we certainly do not need like 20 competing layer ones as we do right now. It's going to be at best a sports shoes situation. You have your Nike, Adidas, Converse, Reebok, whatever. You have like a top 4 or 5 that make up 80% of the market share. And I agree with Dennis in that he said, oh, look, if you're talking about decentralization, then don't point the finger at Solana. Phantom only has 80 validators. All these other ones are kind of centralized as well. Matic and Arbitrum, they're centralized as well. They crash as well. I agree. That's why Brian and I are saying a lot of these shouldn't be around. We thought they would be flushed out during the bear market by now. How could you still have another bull market with all this hanging around? This is crazy. Now, I'll give you guys what I think is the answer why it's not flushed out yet. Because if we look at all the competitors to Amazon, they're all gone. If we look at all the competitors to Microsoft, they're all gone. If we from 20 years ago when they first started trying to be the first, be the only PC software. Not PC software, but PC operating system in the world. It would basically came down to Microsoft versus Wang Computers. That's kind of like ETH versus B&B, BSC system, and Microsoft won. Amazon was competing against Pets.com, and Amazon won. You never hear of Wang Computers anymore. You never hear of Pets.com anymore. Now, the reason why, even in this kind of severe bear market, all of these layer ones are still around, to answer Brian's question, I think I have the answer. I've pondered that for a long time. Like the Fed is doing QT, which is taking away money they printed. They've taken away $850 billion, close to $1 trillion now. They printed $4 trillion. They've taken away $1 trillion. That's pretty severe. You may not notice it much when they print it, but when they take it away, you do notice it. That's why a lot of these coins have gone down 90-95%. But Phantom, Solana, Arbitrum, OP, they're still around. Algorand, INJ, INJ is doing great. Why isn't it killed yet if there's QT? Why is the NASDAQ? In fact, you could ask, why is the NASDAQ still like at this near all-time high if there is QT going on? Well, the answer is this. Basically, about in the previous cycles, if the Fed was doing QE, then everything went up. If the Fed was doing QT, then everything went down. What happened in this cycle is that the U.S. Federal Reserve has an implicit agreement. They don't tell anybody about it, but you watch their actions, you know. They have an implicit agreement with the Bank of Japan. Bank of Japan is the third largest economy in the world. And the Bank of Japan just prints a lot of money. I wouldn't go into the details, but the Bank of Japan essentially is the second most important central bank out there. You don't hear a lot about it, but it's the silent partner. Essentially what's been happening is ECB, European Central Bank, and Fed have both just gone, okay, we have too much inflation, we're gonna do QT. And someone said, wow, if both of you guys do QT, that's gonna crash everything. And then they said, okay, we're gonna bring in someone who's gonna cushion the fall for us. Japan doesn't have an inflation problem. In fact, Japan's got a deflation problem. Japan, you keep on printing money. So that's, imagine like you've got a swimming pool with three massive pumps, spigots with water coming into that pool. And basically then the main pump is called Fed. We turn that spigot off. It stops pumping, and in fact it's drawing water out. And then ECB is like the second or third largest one. We also turn that off and we're drawing money out. And that's why we're seeing That's why Solana went to $17, from $300 to $17, right? And then we said, well, the third one though, Japan, keep it running. In fact, we'll adjust it, turn it on a little bit bigger, so that we can try to bring down the inflation in the United States and in the ECB. But there's still a lot of liquidity around, right? I won't get into the technical side, but essentially a lot of people on Wall Street borrow Japanese dollars and they convert it into US dollars and they come into US to buy bonds, and that injects a lot of liquidity into the market. So essentially we still have a lot of these layer ones that are still around that, like what Dennis is saying, are essentially just clones of ETH. If you have ETH and you like ETH, why would you need a clone of ETH? It's got...
Pablo, are you still there?
Yeah, hello, yeah, can you hear me? Hello.
Yeah, I can hear it.
Okay, yeah. So that's my answer to both of you guys, and you know, I kind of agree with both of you guys. We don't need these many layer ones, and ETH clone is in my opinion. These ETH clones don't need to be there. In fact, I'll ask a question and see what you guys' answer is, and that is, what do we think? If Wall Street and BlackRock and Fidelity, these $2 trillion, $4 trillion, $8 trillion dollar fund managers are going to come in, the largest companies on Wall Street are going to come in and control Bitcoin and control ETH. Come on, guys! If they have ETH ETF, they're going to be doing the staking. They're going to be investing in. They're going to be controlling Lido. They're going to be controlling the Marathon and Riot, all the Bitcoin miners. They're going to control every aspect. They're going to become the largest shareholders of every aspect of ETH staking, of Bitcoin mining, of the validator nodes. Then in that case, what I'm imagining is a year from now, 2 years from now, maybe sooner, we will see not a second order, but a third or fourth order effect, where some people will be like, hey, it was a great price pump when BlackRock came in with the twin ETFs, but eventually we need something that is still independent, that is still proof of work from the big Wall Street guys. Isn't this what we started this journey on? Right now nobody cares because everyone just wants the price to go up. Yes, I'm all for it, but eventually will there be a proof of work coin that we like that can do this job? Do we have an answer to this?
I think if it comes down to it, it's a Bitcoin fork. That's probably the cleanest way to do it, to keep everything, keep the provenance of the history. I've heard this similar kind of argument as well. I'm not sure if BlackRock can actually pull it off, like controlling even Bitcoin. But they have even included clause like if they really wanted to fork Bitcoin, they could, and obviously money-wise is not a problem, but it is the proof of work. You know, if it really comes down to a fork, would this time be different, right? Because it kind of has been done before, where the Chinese mining pools during Bitcoin Cash and Bitcoin are fork. You could say that was almost a success, right? Bitcoin Cash almost became Bitcoin. So yeah, it really could happen. And if that's the case, I don't think we'll migrate to something else that is not Bitcoin related. It'll probably be Bitcoin. This should be called Bitcoin Satoshi Vision, but it's not. But that's taken. Yeah.
Yeah, that's a really interesting discussion. So one, Pablo brought up that Solana is like a house where, if you can get a good deal on a house, then you should buy it. But the higher price it is, the less it's worth, And so I wanted to mention that there's sort of an interesting thing happening right now in traditional finance with crypto, and that's that there are these traditional finance ETFs popping up. And I'm not talking about the Bitcoin and the Ethereum ETF that BlackRock is launching that everybody's buzzing about. I'm talking about total crypto market ETFs, and where you can just buy like one ticker symbol and own the whole crypto market. And I think that as corporate people come into crypto more, and as we see like Fidelity and Van Eck and all these institutions coming in, that there's going to be more demand to just say, let's buy the whole crypto market. We don't understand as much as these crypto guys do. We just want to buy all of it. And that's where, talking about value, I think that there's going to be, people are saying that I'm echoing. Let me try to fix that here. You guys want to talk for a second while I try to fix my echo?
Okay, yeah. So I think there's some audio problems on Brian's side because Dennis could actually hear me talk, but I couldn't hear Brian talk just a while ago. So I think there's some audio problem on his side. That's very interesting that that Dennis talked about Bitcoin Cash and the Bitcoin fork. Yeah, like if that's if BlackRock was seen as openly manipulating the Bitcoin market, because I look at the gold market a lot. I'm from traditional finance, investment banking background. Because I'm from that, so what I can tell you guys is that BlackRock definitely has the power to do this. And in fact, the reason they would get into Bitcoin is they want to control it in some ways. Like not maybe 100% control, but they can certainly influence it. Look at the gold market. The gold market is 8 to 10 times bigger than the Bitcoin market, and they control it. That's why gold prices haven't gone up for so long. Like what I think is actually happening with Bitcoin is parts of the US government are like, why would you support Bitcoin? You want to bury that because it's the biggest challenge to the US dollar. If people keep on buying this story of US can't repay its debt, it's all going to get we're all going to get buried under lots of debt. Bitcoin's the only way to financial freedom, whatever. Buy Bitcoin. Oh, hello? Yeah, if everyone keeps on buying into that, then basically U.S. debt is gonna, debt market is gonna collapse, and U.S. dollar isn't gonna be around, and people will buy into Bitcoin, theoretically. And so, why would the U.S. government support this? Well, one part of the establishment of the powers that be, who elects presidents, the big money, got together and they said they had a discussion with the guys who back BlackRock. Who's behind BlackRock? Those trillionaires. Those guys got together and said, okay, we can either try to bury Bitcoin or we can try to join them. And some guys said, rather than try to bury Bitcoin, what we can do is make it the next gold. And Larry Fink and some of those guys heard that statement and started applauding. They thought, make it become like gold. Yes, we should create a Bitcoin ETF, just like we have a gold ETF, and we control the gold price. It hasn't gone up for 14 years. It's been at 2,000 per ounce for 14 years. Why? Because if gold is reflected to its true value, which is some like $6,000 right now, most Americans and Europeans would go nuts and be like, oh my God, the dollar in my hands, the green dollar, is worth like 30x less than when it was in my father's hands. Right now, when you keep the gold price down artificially, they're like, oh, okay, well, it's still buying stuff, that's what I think eventually is going to be the plan with Bitcoin. It's not even a conspiracy theory anymore, because I think it's Moody's just downgraded US, or is about to downgrade the US debt rating. How confident are you in the US dollar right now? Even Moody's and Fitch, these are Wall Street institutions that give out the ratings on safety of bonds, are saying US government bonds are in a negative. What do they call it? They said they downgraded from stable to downgrade territory or something like that. It was the news on Friday. Anyways, that's probably going a little bit far, but a fork from Bitcoin that would make sense. But it's for the people who are interested in a proof of work coin that can kind of become the next hope or beacon for humanity if Bitcoin gets controlled by BlackRock. Do we see? I guess what I'm trying to ask is there a small, tiny little coin that we like, that is kind of like a new proof of work coin under the market cap of 200 mil, 100 mil, something like that, that has hope of becoming big?
I can't think of any under 200, but when it comes to like things that use proof of work and get popular, if you can pull it off, it really gets people excited. Like Caspa, one of the like strongest coins this year, it heavily borrows from Bitcoin, and they basically call themselves like Better Bitcoin, and very similar halving schedule, tokenomics. Yeah, like Cadena uses proof of work. It's pretty well done as well. Like if you can actually pull off proof of work mining, and it does do quite well. Yeah, I think you could have a point there. I think, once this ETF stuff actually comes around and people realize that it's not, aside from the price action, there's more to it, proof of work could see a comeback. Like we're all talking about like smart contracts and DeFi and proof of stake for so long, but if Bitcoin really becomes kind of becomes threatened, mining could be a big narrative again. Yeah, that could be something to watch.
Can you guys hear me okay now?
Yep.
Yeah.
Yeah, so I think this whole topic of what's going to happen when institutional money comes in, and Pablo actually gets the credit for bringing this up in our discussion yesterday, but it's a really interesting question. You have coins like HBAR and Quant that tend to be criticized by the diehard Bitcoin maximalists because they're not as decentralized and they have central governance. But are the institutional players who are bringing the big money in going to want to prop up HBAR and Quant? And Pablo mentioned yesterday when we were having our long chat about this strategy, the strategy of what's going to be different about this bull run than the last one is when these institutions see the governance board of HBAR and they see all these other big corporate players, they're going to say, oh, we really like that. And what I was trying to say when my audio cut out is that we're going to see this institutional version of crypto probably do pretty well, and that's going to take a number of shapes. It's not just going to be in one arena where HBAR pumps. It's going to be a lot of different things. It's probably also going to be more prepackaged ETF products that are not. I'm not talking about just the BlackRock Bitcoin ETF and the BlackRock Ethereum ETF. I'm talking about ETFs that are top 10 cryptos or top 100 or even total crypto market cap ETFs. And this is going to be a big change to see what does this corporate money want? What do these corporate players want? The Bitcoin and the Ethereum BlackRock ETFs. I thought of the word gateway drug. I probably shouldn't say that live, but I don't mean Twitter God. Listen, I'm not talking about real drug. I mean a gateway, to get corporate in the door, and this is happening right now. I mean, I buy, we have this debate about should you store your Bitcoin on a hardware wallet? What if you lose the private key? All this stuff, and for the first time in history, I have really felt pretty comfortable with the fidelity custody of my Bitcoin. Now, I know, I'm not doing it with all of my stack. I do realize that not your keys, not your coins, but my point is that these corporate players are going to want these products that have that are different from what we saw in the last bull run. So what do you guys think about that? And again, the credit for this idea goes to Pablo because he brought this up yesterday, but what do you guys think is going to be different about this bull run in terms of what the new money wants? If Bitcoin is going to break its all-time high, we need to see new money come in. A lot more money. People talking about, price targets for Bitcoin of 100K, 200K. That's a lot of money, especially in an environment where interest rates are high and there could be a recession. This money's got to come from somewhere. What is this money going to want to see? Are they going to be just going all in on Bitcoin and Ethereum? Are they going to be going in on other corporate centralized coins like HBAR and Quant? And how would these narratives affect our outlook? Is that going to be the new layer one narrative I'm curious your guys' thoughts on how this institutional money situation. And it's funny because last bull run we were all talking about institutional money, but it was just kind of a dream. But now we have like BlackRock, and we actually have real institutional money that's about to come in. How is that going to change the landscape?
Okay, I'll jump in on this to start off with them. So basically, look, it's I don't know if people are interested in diving into this rabbit hole with me, but look, it's I'll try to tell you guys what I think will pump, what I think. I'll try to relate it to how to make money, so that way it's not some sort of pure a conspiracy theory discussion. It's actually about what coins will pump from this situation. Right now, you see, there's a bipartisan. Why is there so much controversy about giving Bitcoin ETF approval? Why is the SEC dragging its feet on this? It's because it's obvious in the US. One side, the Republicans, wants Bitcoin because they call it freedom. And the other side, the Democrats, says, no, we don't want Bitcoin. I'm not American. I'm not pro either war. I'm just saying those are the facts. So that's why Gary Gensler, from memory, is appointed by, I think, Biden, yeah? So he's appointed by a Democratic president. So that's why he's the only one dragging his feet. When the rest of the SEC, the staff over there, are actually saying, hey, that's there's nothing wrong with the Bitcoin ETF. We should give it to them. Gary Gensler is the only guy saying, let's hold it back. Why is this big political divide in the US about whether we're going to get an ETF of Bitcoin or not? And the reason, and this relates to which coins we should buy, because it shows you ahead of time, say 3-4 months ahead of time, before the market is going to realize what BlackRock is going to do with Bitcoin. So one side that hopes for small government is the Republicans and Libertarians. They support a Bitcoin ETF because they're like, okay, we shouldn't print so much money. We shouldn't have a big government. Government shouldn't interfere on things like, what movies you show in theaters, how you teach kids in school. So government should stay small. Therefore, all this spending and debt by the U.S. government is wrong. So they want to introduce gold and they want to introduce Bitcoin. But on the other hand, the more Democratic side is basically like, well, we don't really, we want to control more aspects. We can make U.S. stronger. They're not, no side is evil. They both want what's good for the U.S. We want U.S. to be stronger, and therefore we're going to spend more on education, on the military, bomb more places, invade more countries, and control the education, whatever. So therefore, the US dollar is key to all of this. And it's not just Larry Fink from BlackRock. You've heard Stanley Druckenmiller, who is the protege turned partner of George Soros, probably the best trader of all time, say that he thinks US dollar is going to be in real trouble in 15 years' time. And he said that 2 years ago, before all this debt is so spiraling out of control now. If you were to ask him today, his criticism of Janet Yellen, of the entire Treasury, U.S. Treasury, is horrendous. So, if you are the really rich trillionaires, you're discussing amongst yourselves. They're split between two camps. One side is going, kill Bitcoin, kill the Chinese yuan, kill the euro, kill everything, kill gold. That's prohibit gold again, like Roosevelt did in the United States in the 1930s, and make a U.S. dollar the only thing. Keep it going, man. That's more the Democratic side. The other side is saying, okay, we can't let the Chinese yuan become a challenger to us. We're killing the euro right now by blowing up the pipeline in Germany. You know what I mean if you live in Europe. Europe is screwed because they're stuck in this war, stagflation for Europe. Europe's going to become the next Japan. So now we just have to deal with the Chinese and kill the yuan. Now what we're going to do, gold is already under control. What are we going to do about Bitcoin? Do we kill it? Do we bury it? And someone came along and said, no. Let Bitcoin flourish and become the same thing let Bitcoin become gold, and voila. The Larry Fink knew instantly what that means. It means basically, oh yeah, there's going to be a Bitcoin ETF. Bitcoin's great. We make lots of money from a Bitcoin ETF because lots of people are going to invest in it. Lots of retirement money are going to come in. We make money, and at the same time, we're going to control it. Why? Because they're going to be the largest shareholders of. They're already investing a lot into Marathon, Riot, all these companies. And if they want, they can influence the lawmakers to change the laws to say, well, you're not really environmentally friendly. This is not ESG. We're going to have to shut down Marathon or Riot, Bitcoin, those miners, and chase them out of the United States, whatever. There's so many ways they could play this. So rather than let gold become a threat to the US dollar, they created a gold ETF and they controlled it. Rather than let China become a threat to the United States, they made China the largest trading partner to the United States, and they controlled it. Until now, they think China's getting out of control. So rather than letting Bitcoin and the Chinese yuan threaten the US dollar, they're saying, okay, let's embrace Bitcoin. At least this is the one thing we can actually control. Just like gold. We can't control the Chinese yuan. They're going to try to de-dollarize, but this is one thing we can control and make some money along the way as well. And I think anyone who's arguing against that is basically going to get laughed at. If I posted this view on the internet, right, and people are going to be like, I'm going to get two types of responses. One is going to say, have fun staying poor because Bitcoin's going to $1 million. And the other one is going to be like, oh, just because you missed out buying Bitcoin at 15K, you're trying to talk it down again. So I don't post views like this online, but I know this is actually what's happening, right, with BlackRock. But where it can help people listening today is that, how do I make money from this? Well, about 3 months after Bitcoin gets its BlackRock ETF and ETH gets its BlackRock ETF, or 6 months from then, and price plateaus or price goes down, and people start saying, well, there's clear manipulation. Bitcoin should be at 250,000 or 100,000 right now. Why is it not going up? Why is someone keeping a lid on it? Maybe a year after the ETF starts, people are going to be like, haha, told you it turned out to be like gold, right? It plateaued for 14 years. BlackRock was bullish for Bitcoin in the short term, but bearish for Bitcoin in the long term. I told you, how can it be this libertarian fucking freedom machine that's going to give freedom for everybody? It's fucking controlled by BlackRock, right? And then that voice is going to come out. What I'm saying today is going to come out, and people are going to be like, oh, let's look for the next freedom blockchain. Is that going to be Casper? So just as Dennis was saying, I actually, on my own laptop, which I'm recording right now, I've turned on the chart of Casper just before he was saying it, because that's the one coin that has been in the news, for being a proof of work. Now I don't know if anyone can help me remember this, but there was another coin that also was like KAS or KA something, and it was a proof of work. It was started by two guys who were from Goldman Sachs. It's one of those rare proof of work coins out there, and it's look, another option is CFX. CFX is actually proof of work. It's faster than Ethereum, but nowhere near as fast as Solana. And the one thing that he's got going for it is that it's actually a Chinese cryptocurrency coin. It's actually, the Shanghai government actually invested $1.5 million US dollars into it like 3 or 4 years ago. And people are going to be like, oh, no one want to be investing in a Chinese coin. Well, we want to get in here. Well, the reason is because that's going to be the one coin that the US can't control. And people will be like, that's going to be controlled by CCP. Well, okay, sure. But you may want to hold on to some Chinese yuan or China stocks, because that might be the only thing that the US can't actually control. It might not matter to you if you live in US or Australia, but look at all the Russians. Look at all the Saudi Arabians. They're dumping US treasuries to move it into gold. They don't trust Bitcoin yet, but some of them are buying Bitcoin. Most of it is into gold, or they're bringing it back into Saudi Arabia to build those massive projects. Why do you think they're suddenly building the Lion Google this, LINE, the line in Saudi Arabia. It's a crazy project. They have 6 projects like this. It would cost $1 trillion to build these. Why, 600 billion. Why are they doing this? It's because they need an excuse to take all their money out of US treasuries. China's doing this. They call it the Belt and Road Project. So basically, if you don't live in the US, if you don't live in Europe, Australia, and if you're not listening to Western propaganda, you're basically thinking, shit, my money. If you're a rich whale in Russia, China, any of those countries, you're thinking, shit, my money in US dollars could be frozen at any time. They did this to the Russian billionaires. So what am I going to do? I'm going to need an alternative storage. Gold, like the Saudis been buying gold. Bitcoin, maybe a little bit of it, but it's not going to be the main part of their portfolio. And then, do my oil trade in Chinese yuan. Even Australia, the closest ally to United States, is now selling its minerals to China in Chinese yuan. Not all of it, but they've already started those payments. Basically, it's due to the US dollar dominance. There's got to be people trying to figure out a way out of that system to try to find an independent way of storing their wealth without being controlled by SWIFT and the US dollar. Bitcoin was one of those until BlackRock came in. I applaud BlackRock. It's going to pump my bags in the short term. Is it going to be a 6-month pump or a 2-year pump? I don't care. But then after that, the ideal of a Bitcoin that's according to Satoshi's vision is not anymore. Like, if Satoshi's still alive, if he's dead right now, he's been rolling his grave. If he's alive right now, like, imagine someone said he's reading the news right now and Satoshi's going, Bitcoin is now going to have a BlackRock ETF, a Fidelity ETF, and its miners have been chased out of China, so which means most of the mining power is in the US, which means Marathon, Riot, Hut 8 are going to be the main miners, and their largest shareholders are going to be BlackRock. That's wonderful. CFX is one of the obvious beneficiaries, but obviously the problem is it's also controlled by another government. It's just not controlled by the US government, which might be helpful to begin with, but also the smaller proof of work coins I think can take off. And that's by the way, I'm not saying they're going to take off in the next 3 months. It's going to be what I call third order, fourth order effects. By that, I mean, I don't know if I have to explain this to the audience, but first order is basically something happens straight away as a knee-jerk reaction. Bitcoin goes up, Ethereum goes up because it's going to be a BlackRock ETF. And then second order effects, Bitcoin-related coins like Riff, like STX, like Badger, like ORDI, they go up. And ETH-related coins like Uniswap, they go up. That's a second order effect. And then third order effect takes off. Something else goes up. And then fourth order, and then after all of that, and then people realize, oh shit, that Pablo guy's warning sounded like so boomer and so pessimistic. But now, a year later, 2 years later, we're seeing this happening. That scramble to look for the next proof of work coin. Oh, it's already like 4x'd. I wish I bought it back then. So it's like, anyways, that's my scenario. Back to you guys.
Yeah, so I wanted to comment on that. The interesting aspect here is, will BlackRock sort of kill the ethos or the spirit or the decentralized freedom money of Bitcoin? And I have a question for you, Pablo, that you can address, because you're really the expert on this stuff in the room right now. But look at gold, right? Gold is still decentralized, even though it's been taken over and controlled by governments and centralized organizations. So gold still, you can still, in an Armageddon situation, you can still trade gold with your neighbor, and even though it's controlled. So why wouldn't that be the case, Brian, with BlackRock?
I'll answer that question now. Gold is not decentralized. The reason why people think gold is decentralized is because, hey, look, China's got what is it, 1,500 tons of gold in their vault. US has got only 8,000 tons, and Germany's got like 800 tons of gold. in their central bank vault, whatever, and there are gold mines in Australia, gold mines in Peru, gold mines in Malaysia. So everyone's got gold. It's decentralized. No, man. This is the fucking trick that BlackRock and Vanguard and these guys play. We know that the gold market is manipulated. It hasn't gone up for 14 years. Think how much inflation's gone up in the last 14 years, and yet gold hasn't gone up. The way they do it is this. Gold, you're talking about spot gold. You're talking about physical gold bars that you can hold in your hand, or that's in the ground in a mine, in a gold mine in Australia or in Peru or in Mongolia. That gold, all added up right now, that's been dug out, is something like, like $8 trillion. But the amount of derivatives, the amount of paper gold. So for example, if you buy into a BlackRock ETF in gold or a Vanguard ETF in gold, they can just sell you paper gold. They're like, oh yeah, sure. You pay us $100 million if you're a rich whale from the Middle East, and we give you a piece of paper that says you own $100 million in gold. We have it in our vault. They sometimes do these audits and sometimes they don't, right? It's basically selling paper gold. They can sell an unlimited supply. That's paper. And also that's part of the paper gold derivatives gold story. When you go onto the gold exchange in Shanghai or it's mainly in Chicago. It's mainly the largest gold trading centers in Chicago, and then London Metal Exchange, Chicago Mercantile Exchange, and London Metal Exchange, right? Basically, the amount of put options they can sell on gold, the amount of futures they can sell on gold is enormous. They can sell so much of that. That futures gold, that is paper gold that doesn't exist. That trading volume is about it's like about 50 to 150x larger than the spot gold market. So it's kind of like the real demand for gold is, say, being bought and sold in say Dubai and in US and in China every day is something like, say, $500 million. But something like $20 billion of gold in futures contracts are being sold on the Chicago Mercantile Exchange, on the London Metal Exchange. By whom? By JP Morgan, the largest bank in the world. To do what? To keep gold prices down. That's why we've seen inflation go through the roof and gold hasn't moved. Because if gold really reflects the true value of itself right now, gold would be at something like at least $4,000 or $6,000 per ounce, and that would be like about 2 to 3x from here. And people living in America, living in Australia, would panic right now if they knew that was the case. They would absolutely panic and realize, gee, the fiat dollars in our hands are worth nothing. That's
some real alpha that Pablo's telling us right now. I mean, that's really interesting about how BlackRock can manipulate the price of Bitcoin, and it's no longer this freedom money. But I want to get back to also what you said, and this is great news for getting back to making money, that even if this happens, it's going to be great for altcoins, right? So let's just envision how this goes. The Bitcoin ETF gets approved, institutional money comes in. Maybe later on, everybody gets disillusioned with Bitcoin and says, oh, it's controlled by corporate greed and, by the suits. It's against what Satoshi's vision was. We can all agree on that. But in the meantime, there could be some other proof of work coins that are trying to replace Bitcoin with a new ethos, a new decentralization, a new true Bitcoin spirit, which again could spark an alt season and a new narrative of. We saw this a little bit in the last bull run, where there were these coins that were just pure store of value, pure decentralized proof of work, and so that could kick off a narrative in that. So that's something for anybody listening to keep an eye on, that narrative might come. Another thing I think that's interesting that you said is, sort of gold, the price stabilizing. And I think there's another force that might stabilize the price of Bitcoin, and that's that some of these institutional players who are going to buy the ETF and buy, these institutional products are not traders, right? They're going to be mom and pop retirement pension funds that just have been pressured to hold crypto because, you know, all of the Gen Z and all the millennials are saying crypto, crypto, crypto. Now they're all school teachers and they're working and they have pensions. So they're going to say, okay, fine, we hear you, we get it. We're going to allocate, 10% of our fund to this BlackRock Bitcoin ETF, and we're just going to let it sit there. We're not trading it. And that's great. Again, that's like a bullish thing for the crypto markets because maybe the Bitcoin price isn't as volatile and we don't see those blow off tops as much, but maybe we settle in at 100K, 150K, whatever. There's these higher lows. And yeah, after a while, that's going to get boring, and everyone's going to tune out of crypto like they always do, and they're going to say, oh, okay, whatever, 100K is the new normal, it's the new 10K, which I think is hilarious now that people aren't, looking at 37K Bitcoin and thinking it's amazing. Everybody's just asleep, and they're like, oh, that's low, that's normal. That just shows the frog in hot water, boiling as price goes up and nobody really sees it. But in the meantime, before it gets boring, that's going to be great for alt season, right? And that's what we really want to talk about is the small cap alt season. That's the name of the space tonight. And that's really going to be great for it as we see that stabilization for the next 1, 2, 3, 4 years. That's going to be really good for alt season. It's going to be really good news for the people who are listening now, who are here early, who are, hunting for these small caps.
Okay.
We are in a
Brian.
great environment.
Brian, we should deliver on the promise of our title, which is small caps for a new bull. After going through all of that talk, we should give our audience the reward they've been seeking, which is let's name some specific coins we think that can work because of this ETH pump. Now, basically, okay, so to catch you guys up, if you've been watching my videos or Brian's videos, what happened is when the Bitcoin ETF news got announced, 2 Bitcoin-related coins called Stacks, STX, and RIF, RIF, pumped. So then my reaction was, oh, what other Bitcoin-related coins are there? Money will rotate into them. So one I found was Badger, but it was not moving at all. And I was like, when is this thing going to pump? But I kept on telling my Discord, I think it's probably going to pump. And then another one is related to the Bitcoin ordinals and got listed on Binance. It's called ORDI, O-R-D-I. From my research, I think ORDI is more of a meme coin. It just has the name ORDI. It's not directly related to Bitcoin ordinals. Some people would disagree, but that's because they probably invested way too heavily in it. But lo and behold, I named ORDI and Badger, and this shows how early we are in a bull market. Because in a normal bull market, if you're related to Bitcoin, then all 4 coins would have pumped straight away. But because we're so early in a bull market, if I'm right, then basically what happens is money slowly, after about a week or so, rotated out of RIF, RIF, and STX and went into ORDI and Badger. And ORDI went up 3x and Badger went up 2x. And this is about 4 days after I posted in my Discord. And even I wasn't that sure at the time. Now, so after we've seen that, we now have a playbook for what can happen to ETH. Now the ETH ETF news got announced. And to be technical with you guys, the BlackRock has not applied for a Ethereum ETF. What they've done technically is apply for a Ethereum trust in Delaware, which is a prerequisite step for leading up to applying for a Ethereum ETF. And we think it's going to happen. Not 100%, but we think it's going to happen. If it's going to happen, then therefore, which Ethereum coins are going to pump? Yes, it's exciting. Ethereum went from 18 something to hit my exact target, which is 2130, and it's a great 10% move. Great. But what coins can do a 3x like ORDI or 2x like Badger? What coins in the Ethereum ecosystem can do that? There are a lot more coins related to Ethereum than say Bitcoin. But how which coins are we looking at? And that's the promise of the title. That's the promise of why we call this small caps for a new bull. We're not looking at mega caps like Bitcoin or Ethereum. We want something that's like not under $1 billion, under 500 million. Ideally under 100 million. That can go 10x, 20x, even 100x. So what are your thoughts, Brian?
Yeah, I mean, I think that's a really good point that Bitcoin gave us a playbook, and that we should be looking down the line at, at Ethereum. And I think like one of the obvious ones, and this is bigger than a 100 million, but one of the obvious ones I think is Uniswap, and that's just the main DEX on Ethereum, and it still hasn't moved yet, right? I mean, it's just barely moving. So that's one that people might, and this is not financial advice, it's just what I'm doing, park some money in that now as I'm hunting for altcoins, for other smaller coins, because what's going to happen there? It's pretty safe, unless there's a big, of course it's not as safe as cash. It's not going to, it's not perfectly safe, but it's one that needs to move in the cycle of money flowing from Bitcoin to Ethereum down the line. And then you also found a much smaller, more riskier DEX that just launched like a week or two ago on Ethereum.
Okay, Brian. I think you're jumping ahead of the queue right now. Like, there are so many more obvious coins before we even get to Uniswap. Uniswap took me like 2 days to think of it. Like, there are so many. Okay, for example, like just look at the coins that have pumped so far. As soon as Ethereum and ETF news came out, Ethereum Classic pumped, right? ETC pumped. ETC is kind of like, I think it's already over a couple of $1 billion. So it's kind of a mid cap or a slightly larger cap. Nothing as big as Ethereum, which is $230 billion. But then another obvious one was Lido, Lido, which has quickly become the number one platform for staking ETH. So what I've been saying to Brian is that if there's Wall Street money going to come in, there's boomer Wall Street money going to come in, guys like Larry Fink, guys who manage Fidelity, they're going to come in. They're 55 to 65 years old. Think like them. They're going to come in. They're like, okay, if you buy this ETH for the ETH ETF, we can actually get some yield from this. Like, we can get 4.5 to 5.5, even 7.5% yield just by staking this ETH. And guess what? If we stake it, we control the ETH. We control ETH because if the more you stake, the more nodes you control. And also, you get an yield from this. That's just like buying a bond. That's like buying a US Treasury bond, because you get a 5% return. What's not to like about that? They love yields, right? So the first thing they'll go for is Lido. So Lido had like a 15-20% pop on the news. And then there are smaller LSDs. By LSD, I mean liquid staking derivatives. Like Lido, where you stake your ETH, but you can actually get these ST ETH coins, staked ETH coins, and you take them out, right? So you can still trade with it. You can stake your ETH and you can trade it as well. That's what liquidity staking is about, LSD. So there are smaller LSD platforms as well, which are big with ETH. And then, on top of that, there are the DEXs. Which I don't think is the most obvious choice. There's obviously Uniswap and SushiSwap. And then I thought, hey, look, let's try to think as a boomer. Brian and I disagree on this, so let's talk out our disagreements on this. I thought, look, if you're going to be a boomer, like if you're going to be Larry Fink, a guy who's like 60, who runs Wall Street, the guy literally runs Wall Street, you're going to come in and you're going to trade you're going to start playing around with the Ethereum. And then you say, well, how do I transfer, say, 1 million ETH onto Lido and start staking? And then someone says, okay, here's Lido's address. You just have to transfer that money onto Lido, 1 million ETH onto Lido. And he says, okay, send me the address. And the address is something like, FA 353-67 ABCZ 527. It's like 24 digits long, and it's full of these numbers. And he says, what is this? And he says, that's the address of Lido. You have to copy that onto your MetaMask or whatever alliance, a block alliance, whatever the app you're using, and transfer to. And he's like, oh man, this is like so geeky and nerdy stuff. I can't do this at 60. And he says, is there an easy way to do this? The Harvard grad, who's the 28-year-old Harvard grad who's working as the assistant of Larry Fink, is going to say, you know what you need, Larry? There's an easier way to do this. We're going to name all the portals for you. We're going to go Lido.eth. So you just go Lido.eth, transfer there. Boom. I don't want my money to transfer back to me. You're going to, rather than give you a string of numbers and letters that's 24 long, it's going to say LarryFink.eth. Transfer it back to LarryFink.eth. Oh, boom. Oh, that's easy. So it's like I get it. It's like emails. It's like internet domains. It's like I want to transfer money to LarryFink@gmail.com. Well, Larry's going to transfer it to Lido which is Lido at hotmail.com. Oh, that I get it. It's like emails. It's like internet domains. It's like if we need to register BlackRock.com. So, and guess what's the one service that enables you to do that? It's ENS, Ethereum Naming Services. So that was my thought. I was like, those boomer guys gonna come in, they're surely gonna need that. They can't handle what we do. They can't go on Sushi Swap and Uniswap and adjust the slippage and do all that sort of shit. They don't want to learn that. So in fact, now Brian's gonna disagree with me because we had already had this discussion. But before we get on to Brian, in fact, before we go any further, the reward for folks who we've had this chat has now been going on for 2 hours. The reward for folks who have stuck now to the end is me and Brian said, hey, you know what's a good idea? If you really want to make big money right now, if BlackRock is going to create a Ethereum ETF and big money is going to come, Wall Street is going to come into the Ethereum ecosystem, then do what they did with those internet.com domains. Remember how have you read about those stories of people got rich by registering a .com, such as LV, Louis Vuitton.com? They would buy like 3 of them, LV.com or Louis Vuitton.com. They would buy Chanel.com. They would buy Moet.com. They would buy Converse.com. Like all the brands like Louis Vuitton, brands like what's it called, Moet, brands like Chanel, they're huge brands. They're worth a lot of money. In fact, the richest man in the world right now is the owner of LV Moet. He's a French guy, and he's richer than Elon Musk. But the problem is, they're such a luxury brand. They're not on the internet. You can't go onto the internet 10 years ago, 5 years ago, and go, I'm gonna buy and order an LV or Gucci or Hermes bag, and order it online. So some really smart dudes paid $3 or $50, whatever the fuck it was, a super low amount, and registered the domain under their own name. They bought LV.com, Louis Vuitton.com, Hermes.com, Moet.com. They bought all these domain names because those luxury brands are like, we're not for the average retailer. We don't want to be online. We're for super rich people who can afford $50,000 for a bag. We're for billionaires, right? And then eventually they're like, okay, you win. The internet wins. We're going to have to get ourselves an internet presence. So when they start going, okay, that's registered Louis Vuitton.com. Then their lawyer comes back and says, sorry, Louis Vuitton.com's been taken. They're like, what do you mean it's been taken? That's our IP. That's our property. And they're like, well, yes, but someone can just register Louis Vuitton.com. Some guys already bought it. Okay, and then they say, what about LV.com? Fuck that. Let's go LV.com. And then someone comes in, the lawyer says, that's also been taken. They're like, okay, let's speak to the guy and buy it off to him. They contact the guy who bought Louis Vuitton.com, who bought Hermes.com, and says, we want to buy it off you. And the guy says, okay, buddy, $2 million. What? You bought it for like $20 to register that domain name. And he's like, yeah, I know, $2 million. And they go, be reasonable, man. They go, you're Louis Vuitton. Your owner is this French guy who is the richest man in the world. You want to pay me $2 million for LouisVuitton.com? Or you're going to have to come up with some stupid name like RealLouisVuitton.com or Louis Vuitton for real.com or like RealDonaldTrump.com, whatever. Your choice, buddy. You're Louis Vuitton. You want to call yourself RealLouisVuitton.com and I start selling knockoff bags from Asia called LouisVuitton.com on my website, you can sue me then. Whilst I live in Panama, they're like, oh, screw it, $2 million, nothing to us, we'll pay it. So what's the lesson here? Now, if all these big guys are going to come in, my thinking is jump on it. Register LarryFink.eth, register BlackRock.eth, register Fidelity.eth, register, all the names and combinations you can think of, Vanguard.eth, ETH ETF.eth. I don't know, like those ones are going to get taken. Lido.eth, they're going to get taken pretty soon. Like if you can think of 30 names, 50 names like this, it may cost like $20 or whatever it is to register one of those names. And then if one of those name hits, if Larry Fink or BlackRock calls you up and says, we want that name, right? If one of those name hits, it could be like a $200,000 sale or a $2 million sale, right? This is the reward for folks who stick with us. Like it's been a bear market, right? Like I lost some followers just because I talked about World War III and said World War III is coming, and some dickheads fucking stopped following, right? They're like, hey, this Pablo guy, he got it wrong, he got that prediction wrong. Well, yeah, they're getting 70 to 80% of the predictions right is already fucking pretty amazing. You show me a guy who can get 100% of the predictions wrong. So for folks who have stuck with us for over 2 hours, thank you. And this is the reward for sticking with guys like Brian and myself. This is the small caps for the new bull market. But back to you, Brian. You what's your argument against ENS?
Yeah, I mean that's a brilliant idea, really, to have it's almost like a side hustle of registering these domains. And you're right, because the boomer mentality is going to be, well, we want to register BlackRock.eth, right? And so that's a great side hustle, and it's not even that expensive. I mean, I don't really have a counter argument to it, except that I don't know how much they're going to be using these domain names, these addresses for practical purposes. But you're very right that they might want to own them anyway. BlackRock, $10 trillion organization might just say, get us BlackRock.eth. I don't care if we ever use it. We want to own it. We want to put it in our in our list of assets. So I can't really find any problems with that. And also, one thing that I think is really interesting about the announcement of the BlackRock Ethereum ETF is that Ethereum is a whole ecosystem, right? So all of these little narratives within Ethereum can pump. We're talking about Sushi and Uniswap, the DEXs, we're talking about Ethereum name server, we're talking about layer 2s, all this stuff, because the Bitcoin ETF is just for one asset. It's Bitcoin. And yeah, sure, all these other little side coins, like what Pablo called ahead of time in his Discord, those can pump too, but they're not really connected to Bitcoin. There's nothing really connected to Bitcoin, right? Except, Coinbase stock or something. But Ethereum is an entire ecosystem, and the Ethereum ETF legitimizes Ethereum and the ecosystem, and it is going to be fascinating to watch how this institutionalization...
Okay, Brian, just before we move on to the smaller coins in the ETH ecosystem, in our conversation earlier, as we were debating about this, one of the objections you raised about ENS is that it's not really blockchain technology. It's actually kind of a gimmick. It's simple to do, and it's not really blockchain technology. Like you could say, like Dennis was saying, Phantom is actually only have 80 validator nodes. It's very, very centralized, but at least it's blockchain technology. At least it's an improvement upon ETH in terms of efficiency at the cost of independence. But however, this Ethereum naming service is not even really a blockchain technology. So I'd like to hear you expand more on your argument, so we have both sides of the story, because I'm not that sure about ENS either. We're all just guessing right now. It's like when I mentioned Badger and ORDI already to my Discord. I was like, I think this is going to pump. I think it's going to pull back and then pump. I didn't know which day it was going to pump. It came about 3 days after my message and made extraordinary pumps that surprised even me as well. So these things are predictable to an extent, but unpredictable to an extent as well. So I'd like to hear you expand on your argument from before.
Well, I'm not sure I even remember the full argument, but I think what the gist of it is that there's really two different things happening right now. There's what is actually going to be used, practically speaking, and then there's what is going to pump and what is going to be a narrative. And they're not always the same. If you guys remember the last bull run when crypto gaming, play to earn, pumped like crazy, and metaverse, right? I mean, some of these metaverses in games had 2 users or 7 users or 42 users, and they were still valued at $12 billion. So I think the real question that we need to be asking as super early adopters isn't necessarily what's going to be used in a practical sense. I mean, sure, it's fun to ask that question and we can speculate and sometimes we'll be right. But what is a better question to make money is what's going to pump, what narratives are going to catch on. And I think I was maybe objecting and saying that, I don't think that the ETH name server narrative is really going to catch on. I haven't really ever used those name servers other than when I'm snooping around looking on the blockchain and I say, oh, this, Jared from Subway.eth bot is, raking in tens of millions of dollars per day. That's really the only time. I haven't seen it used practically. So I guess that would be my main objection, is that I don't know that these ENS
So
names...
Brian just admitted to everyone, we've got like 200 listeners here. Brian just admitted to everyone that he snoops online for the accounts of Jared from Subway.
Well, yeah, I mean, that's the thing about blockchain, right? Is it's all
public. Like, were you searching his pics or video files?
Well, no, I ran into him. I didn't even know who it was. I was looking at.
You ran into him.
I was looking for whale wallets.
You ran into Jared from Subway. Was this at one of the meetings?
No, I didn't run into the person. I ran into seeing the address on the blockchain and seeing that this bot is making all these crazy arbitrage trades, and I was like, wow, this is really amazing. And then I looked into it and researched it, and yeah, it's one of those what do you call it? I can't remember the technical name. It's one of those arbitrage bots. There was, what I'm talking about. There was a whole thing about this.
So there's something you learn every day. Brian ran into Jared, the Subway guy, before he went to jail. So they were in meetings. They were in meetings together. Okay, noted.
Right.
But So my thinking is, it's not just BlackRock. It's like if BlackRock comes in with the Ethereum ETF, do you notice this? Like when there were already 4 Ethereum ETF applications already from kind of famous institutions like ARK. There's another one called BitShares, I think, as well. They're already well known in the industry, but they're not known to the wider public, and they didn't pump the price. Like ARK is already kind of famous. Cathie Wood's ARK, like I don't know how many guys here would know it, but she's already quite famous. She's the main backer of Elon and Tesla. Now, but when BlackRock announced their ETF, which was the 5th largest one, it just pumped. The price of Ethereum just pumped. In fact, that same thing happened with Bitcoin. There were already like 8 or 9 applications for Bitcoin ETF, and then the ETH one, and then the BlackRock application came in, and then the whole Bitcoin pump from 24K, 25K to 37K now just happened, like a 50% pump. So it makes a difference when BlackRock is doing it. It makes a difference when Fidelity is doing it versus when someone like what's the name, say ARK, which is already famous, is doing a Bitcoin Ethereum application.
Cathie Wood is too specialized. She's dreamy-eyed. Her picks have been terrible. She's one of the worst pickers ever. So nobody was really surprised. I mean, Cathie Wood and ARK filing for an ETF, a crypto ETF, is like Michael Saylor saying that Bitcoin's going to the moon and everybody's. It's meaningless, right? But BlackRock is the real deal. BlackRock is is an asset manager for $10 trillion. They don't mess around. They're not really here to.
Okay.
They're not crypto maxis. They're not crypto bros, right? Kathy Wood is a crypto bro.
Okay. So what I'm trying to say is this, Brian. What BlackRock brings to Ethereum and to Bitcoin is not just, trillions of dollars, which obviously helps, but what it brings is legitimacy in my mind. All this time, people have been going, crypto is a scam. Crypto is a scam. When I go to like upper class parties, when I go to like certain circles, people ask what I do. I don't actually say, I talk about crypto a lot online. I actually don't tell people that because it's still looked down upon in high society circles. Whereas now, people will want to know, what do you know? They're like, hey, you're the guy who talks about Ethereum. And I'm like, oh, yeah. And they're like, why do people's attitude change? Because the largest financial institutions on Wall Street in the world, followed by China and Hong Kong, are now acknowledging Bitcoin and Ethereum with a spot ETF. That's like it's kind of like saying skateboarding is for hooligans, and now skateboarding is in the Olympics. It's like saying playing video games is for nerds and geeks, and now video games are about to be introduced into the Olympics, and now it's legit. You can tell your parents skateboarding is an Olympic sport. You can win 4 gold medals from skateboarding. The Asian Games already have computer games. The Olympics are yet to introduce it, so it's not something you do and that's bad. So anyways, what I'm trying to say is then all these boomers who are running their own retirement accounts, who are buying properties for themselves, who are investing in Apple stocks for themselves, and then they come in, they're like, okay, I need to learn all about this ETH and Bitcoin. Looks like it's legit. Looks like I was wrong after all. When they come in, they're like, where do I send ETH to this wallet? How do I send it to my wife's wallet? How do I send it to ETH to the BlackRock account or to the Lido account? Imagine a 50-year-old, 55-year-old trying to run their own retirement account. They're going to have to be like, oh, I see. Lido's made it easy for me. They call themselves Lido.eth. Oh, how do I send it to my wife? Oh, I can't find her number anymore. Is this my wife's address? Like there's like 24 numbers because we're divorced and I need to send her alimony payments, whatever it is. And it's like, oh, there's Cherie Smith .eth. Okay, that's her. It's like an email address. That makes it easy. It's for those people. You do a lot of research and I do a lot of research into this stuff. We don't really need ENS. ENS is sort of like, in my opinion, just like a cool thing. It's like, yeah, I've got my name, which is, BrianRoss.eth. Yeah, that's cool. It has a usage beyond that. It has a genuine usage beyond that. Like this thing of typing in, like copy and pasting 24 long numbers and letters is for geeks. It's like so many things in crypto right now is for geeks. Like even a lot of people in my Discord are like, I tell them about a small coin, and they go, "It's not listed on any of the exchanges. How do I find it?" And I go on to Sushi, go on to Pancake, and they're like, we don't know how to operate that. Where do I find the address for it? I'm like, go on to CoinGecko, go on to Coin Market Cap, copy that, but make sure you copy the East chain if you're going to buy it on Sushi. Make sure you copy the BNB address if you're going to buy it on Pancake. And they're like, what do you mean? Like, and these are young guys who are just starting to get into crypto. Imagine the 50-year-olds who are going to come in now because BlackRock and Fidelity is getting in. They're not going to learn that. They desperately need. There's a word for this in traditional sales. It's called user-friendly interface. UFI, user-friendly interface. So why doesn't Louis Vuitton or Amazon just say to people, yeah, just go to find Amazon.com or to find Louis Vuitton.com to buy from us, just go to ABC341 WXYZ 657 XYZ.com. Nobody would know what that is. Someone came up with the idea of saying, let's make it user-friendly for all the moms doing shopping on Amazon. Let's make it friendly for all the rich 50-year-olds who are worth $50 million who want to buy a Louis Vuitton bag for their 20-year-old mistress, right? call it lv.com. They only have to remember that. So it's anyway. That's in the end, nobody knows. But that's since I was quite right about Badger and quite right about ORDI, I just didn't know when they were going to pump, and all the folks in my Discord saw that. Now I'm thinking, okay, ENS, Sushi Swap, Lido's an obvious one, and then Uniswap, all these ones, ETC's already pumped, are obvious choices, and we're probably going to see more gains to come out of them because we're going to see more news from BlackRock ETF application, because they actually haven't put in the ETF application yet. They've only put in a trust application with the Delaware state government. Then they need to do the ETF application. Then SEC is going to give their feedback, and we're going to go through the whole shebang. That's back to you, Brian.
Yeah, that's interesting, and I think we can wrap up on that note. But it's interesting, how the Fidelity and the BlackRock is bringing the UFI, user-friendly interface, to even another level. Coinbase is really user-friendly, and it's a publicly traded company. It's audited, it's great, but there's still a lot of boomers that don't want to use Coinbase or don't trust it. And I mean, you even asked me, Pablo, I think it was you that said, are you really keeping your coins on Coinbase? Because it's still not perfectly trustworthy. So the whole institutional ETF thing is bringing it up even to another level. And what I think will be really interesting is to see if some of these brokerages like Fidelity, Vanguard start getting even deeper into the ecosystem, where they're not only offering an ETF, maybe they're offering Ethereum staking. Can you imagine if Fidelity or Vanguard offered Ethereum staking, and the boomers could just click a button and their $2 million of Ethereum would be staked, boom, immediately? What would that do to the value?
I absolutely can imagine that. I absolutely could, because the whole game here is about control. Like offering. Okay, what's a money market fund? Every bank has a money market fund. Every bank has or even non-banks. What does an insurance company do? An insurance company basically says, I'm going to insure your car. Like, what do you drive? How old are you? How long have you been driving? Okay, $800 a year from you. You pay your $800. They take that money and they stake it, right? They put it into a money market fund, or they buy U.S. Treasury bonds with it. That's why all these insurers and banks are in trouble, because anyways, that's because the Treasury system's bonds have crashed 50%. But Fidelity, that's exactly what Fidelity does, except they're now just doing it on a blockchain. And the added benefit, some 28-year-old Harvard graduate working in the office is going to tell the 55-year-old boss, oh, and by the way, the more you stake, the more you control the Ethereum system. In fact, if you can stake like 50%, 51% of all ETH out there, you can actually revert transactions. Say if some guy from Hamas or some guy from Afghanistan that you don't like, that U.S. government doesn't like, that's making this transaction of $2 million that you think is going to support terrorism. Okay, you can reverse that transaction on Ethereum. And guys like Larry Finkel, the head of Fidelity, is going to be like, what? You mean to tell me you get 5% yield on this thing by staking it, and if you stake enough, you also get to control the system? Yeah, that's what blockchain is. That's what validating nodes and proof of stake is. And he's going to be like, we're BlackRock and Vanguard. Between the two of us, we can easily control 51% of all ETH staking nodes. We just have to make it not look like we're controlling it by spreading it out between 4 or 5 different companies, and we already are the largest stakeholder in Lido, where they could easily become, like what they do with every company. So there's so much incentive for these companies to do this. It makes so much sense for them to say, hey, buy your ETH from us, and once you bought your ETH, they're like, that's a great retirement option to be exposed to cryptocurrencies such as Bitcoin and Ethereum. Great innovation technology. By the way, they're going to send you a friendly email and say, is your Ethereum, lazy Ethereum just sitting around in your account not earning yields? Well, David, they're gonna come up with some guy on an ad. You can already see this boomer guy lying on the beach somewhere in Florida, and he says, David is earning 5% yield on his Ethereum. don't have lazy ETH. Have your ETH work for you and generate more ETH, right? So use Fidelity or use BlackRock ETH staking, get 5% yields or whatever. But when you stake it, let's say you're a boomer with $1 million retirement, you have more than enough to stake an ETH and become a validating node. You've already reached that threshold. Was it 16,000 ETH or 1,600 ETH, whatever the number is? They're not going to tell you that. They're going to say stake it with Fidelity, stake it with BlackRock. The yield it pays out is say 5%. They're not even going to give you the full payout. They're going to give you 4%. They're going to keep 1% for themselves, and they're going to aggregate all your boomer ETH and use that to control the nodes on ETH. So they make money off your ETH by taking skimming off the top of the yields, rather than give you the full amount, and they're going to control the entire ETH network, or become a very influential validator on the ETH network. And then people like me are going to be screaming, saying, that's what they're doing. They're controlling ETH, and they're making money off you. You could just stake this yourself and be a validating node on ETH. And then those boomers who come in to do this for their retirement, they're 55, they're like, what platform do I go to? Can I trust Lido? What if Lido gets hacked? How do I do this? This is just a string of numbers, like 24 numbers long. Like, do I copy and paste this? Or what do I do with this? Which comes back to my point of view, which is they're going to trust institutions and easy solutions. They're going to need an email or a web address that's as simple as Lido.eth, Fidelity.eth, FranklinTempleton.eth, mywife.eth, myson.eth. I'm going to send my son at college $5,000. That's 2.5 ETH right now. Okay, Brian Jr.eth. Send that right now. You know, that's. Anyways, that's my point of view.
Yeah, I mean, it's very true. And I mean, even I was willing to pay the 1% Coinbase spread today when I was in a panic, and I was like, I better buy AVAX, I better buy more Solana, I better buy ICP, and I get my Coinbase set up, and I'm like, why is the price, $20 higher per Ethereum coin than it is showing on what the market price is now? And then Coinbase says, oh, there's a 1% spread. Coinbase is making their money, and I'm like, I'll pay it. I don't care. I'm going for 2x, 3x, 4x gains. I don't mind paying the 1% spread. And that's exactly what you're right. That BlackRock and Vanguard, Fidelity, they're all going to see this Ethereum staking as a revenue opportunity. They're going to skim off, whatever fee, and now it's an ongoing, repetitive, recurring revenue for the brokerage, because instead of just one transaction, when the boomer buys Ethereum, it's going to be every single month when staking rewards come in, they get a little piece of it. And since they want to make money for their shareholders, they're going to try to take a piece of that market. And yeah, the boomers, I mean, my dad, everybody's listening, their dads, they're not going to care if 1% gets taken out. Nobody cares. They just want it to be easy and safe. And everybody wants a piece of crypto when it's easy and safe. And that's why it's just going to get easier and safer, because that's how they're going to profit from it, right? I mean, that's why we all use Coinbase. We don't love Coinbase. We don't hate Coinbase. We don't really care about Coinbase. We use it because it's easy and probably pretty safe. So yeah, it's the writing's on the wall, and we'll keep everybody posted. I mean, this is what Pablo and I are talking about all day long now is these small caps. We have quite a list also that we are researching and not quite ready to share because we need to research more. So make sure to keep tuning in. And I'll just, my final thought for the night is simply that I don't think we really, and I tend to be a perma-bull, so you guys can temper this with Pablo's warning about a recession and possibly, higher lows, in the crypto market. So don't run out and buy a bunch of crypto just because I'm saying this, but this is just my own personal thought. I made a tweet about how this is sort of a magic moment in time. And what do I mean by magic moment? Well, during the bear market, there was some real concern that the SEC was going to kill crypto, and they had a good reason to kill crypto too. I mean, the whole FTX, Sam Bankman-Fried fiasco, they were gunning for crypto, and that's why people like me were not buying enough $15,000, $20,000 Bitcoin, right? I was like, oh my gosh. I remember telling you this, Pablo, like maybe a year ago or 6 months ago, how is Bitcoin going to recover if the SEC really does try to kill crypto? Well, why do I say it's a magic moment? because they didn't kill crypto, right? They didn't. They failed. Gary Gensler's under all these congressional review boards. Congress really, there's a huge feud and battle in Congress right now about crypto. And yeah, maybe there will be some new regulations in a year or something like that, but it just doesn't seem to be happening right now. So it's a golden moment because we're still before the bull run, more or less, but we're after seeing that crypto survived the bear market. The SEC has not killed crypto yet. In fact, quite the opposite seems to be happening with the BlackRock really pushing and elbowing their way into getting these ETFs approved or at least considered. And there's just been this floodgates opening of all of these institutions, Fidelity, you guys know all the names, applying for ETFs. And so it's a golden moment because we're before the bull run. And so we have this opportunity, but we're after knowing in hindsight that crypto isn't dead, right? So if you're not so amazed and impressed by this golden moment, then I don't know what to tell you. And again, that doesn't mean that it's up only. We might see a huge recession. Next year, Bitcoin might go back to 20K. I don't really know. We can't know the future. There's risk in any investing, right? So this is not financial advice. This is just my opinion. And I'm happy that all you guys are here and listening to this and at least interested and aware of what's going on. So that's sort of my closing thought. What about you, Pablo?
Okay, yeah. So as we're researching this this gems list, some we're not sure about. Some Brian and I are debating about. I've shared some that I'm more confident on.
Pablo?
Yeah. Oh, hang on one sec.
Yeah, we've had some fun technical glitches.
Oh no! I'm here. It's just that my silencer was on because I've got some noise in my background. So as we're both researching some of these coins, we might agree sometimes, but we don't always agree, and sometimes we disagree. When I start feeling confident about a coin, usually it's a small cap. Like we can talk about AVAX and Solana all day, but these are $5 to $30 billion coins. Realistically, a 10x on a $5 billion coin like AVAX is a big ask, unless the Fed really starts printing money. Then could go to 50 billion. You're asking a coin that's Solana is 35 billion right now. For it to even 5x from here, it's going to be 175 billion dollars. So keep those numbers in mind. Ethereum is only at $230 billion right now. So the exciting place, as Brian and I wanted to start doing these spaces or these talks, I've recorded actually the visuals with charts of what I'm talking about today, of this whole thing, and I'm going to post that on my YouTube as well as a longer video. The reason why we want to start doing this right now is because we both think that there's a solid chance a small bull has started. Of course, we could be wrong, and we're trying to pick some small caps that can go a lot higher than a 10x. And of course, we talk about the big caps, like they switch to AVAX. At what stage is Solana good for value? But the small caps, we have a lot of discussions about it. We don't always agree. When I find something that I'm confident on, whether it's from a fundamental point of view, like we've been discussing, where I think a chart setup, which I think is very, very alluring. It's a very solid setup. Where if there's both happening, then I've also posted in my Discord as well, and also that's one way to follow my Discord, or keep tuning in for the videos that and the tweets that both of us makes. There's various ways to do this. Hope you guys can profit from this journey we're about to embark on.
Yeah, thanks again, everybody, for tuning in. And like Pablo said, we'll be doing this a lot more. And so we will look forward to seeing all you guys again soon.
Okay, cool. Catch you guys.